Hello, how much capital is needed to start swing trading? Well, I will say as little as the amount required to open the brokerage account. Like when you open the brokerage account, the minimum amount required to have in the account that your brokerage firm require you to have in the account, if it's high enough to buy one share of a stocks that is on your watch list, that's all you need as a capital to start swing trading. And every month, trying to put a little bit in the account every month. If that's $50 you can do, that's great. If that's $20, you can ask the brokerage account what is the minimum amount you can transfer from your bank account to your brokerage account. And if that's $20 that you can afford and you can transfer that amount to your brokerage account a month, you do that. If that's $15 you can transfer. If that's $10 you can transfer, and it's okay to transfer as little as $10. You put it there. Even if that's $5, you put it there. You transfer it to your account every month. After a few months, you'll have enough again, and you might have a stock that is well positioned for you to buy one share of it. You start small and you grow your account from there. I'm going to, for instance, today we are going to do some analysis of three stocks, but let's take Google for instance here to see if you are interested in buying Google. We have maximum daily chart. We have the date on the x-axis from the past to the present. We have the price on the y-axis from $0 up. So if we enter Google, so Google is $300.20, but right now you cannot buy it. If you are using long option and swing trading strategy, you cannot buy Google. We have trend lines at the valley of the mountain or passing by the higher lows of the charts, and there is our entry point. We want to buy when the price pull back to that valley line. That's where we want to buy, and we want to sell after the price exceed all-time new high, the previous all-time new high. So we use those three extremes for our entry point, the valley line, and our exit point, the the peak. So therefore, currently the price is closer to the peak than it is to the valley. Therefore, it's not a buying time. If you want to buy Google, you might want to start saving money for it. And at the valley line here currently is around 190. So let's say Google, last time Google was around the valley line and I purchased it there and I sold it there. So I purchased it at $162 a share. If you're interested in Google back then $162 is all you need to start swing trading, to buy one share of Google and and to start swing trading it. So I'm going to show you few. Let's take this account for instance, and that is my Roth IRA account, and it is a small account, and you can see it is a is account history. So that is showing the transactions that went through it. So it is a Roth IRA that I traded in some years ago, and this year I'm thinking about putting money there a little by little and start swing trading there as well. So we can take a look at it, and you'll notice that I purchased it some stocks this year, and I only purchased one share of them, you know, and those are the price per share of those stocks, and I made a contribution to it, and that is what I transferred there, and I used that to purchase one share of those stocks instead of purchasing a larger share of one stocks, which is another possibility. I just purchased one stock of those. Going to 2026, I'm doing chart analysis to see stocks that will be in our 2026 watch list, and as I'm seeing some stocks that are well positioned for buying now, I made that decision that instead of letting that account be with the cash in it, I can just start swing trading little by little there. So because we swing trade in our taxable brokerage account, that way the money is more accessible. If we want to tap into it to do other things, we can. Therefore, I don't do much in a Roth IRA or in my Roth IRA, and I decided that, you know what, I'm going to be doing a little by little there as well. So earlier this year, I moved 100 to it, and it has been generating some interest there, the money that I have there, and again later on I move this amount there. So, and you can see those stocks that I purchased there earlier, some months ago. I purchased these stocks, but right now it's negative. I purchased pretty much the money that was there. I used a good amount to purchase 10 share of that. It was before I start purchasing one share of those. Otherwise, I would have split that amount, into multiple stocks as well. So, but that is just an example there. A small account, a Roth IRA, and I can open the account position. That is the portfolio. The other one is the account history, those that show the transactions that went through it this year, and this one is the account position of that Roth IRA, and you can see the stocks that we purchased, and I have some stocks in it. I have those mutual funds in it. They have been there for some years now. I have these stocks that I purchased some years ago there, and I have these stocks that bankrupt on me there as well, and those has been there for some years now. And this year I say, instead of having the cash there, I can just use it to buy a stocks, and since these stocks was lower back then, I just used a good chunk to buy some share. But you can see that it went even lower, so I'm negative in that, and I just let it be. So, and after that, I purchased one share of other stocks as well. You can see the cost basis mean the amount I spent to buy those stocks, and that is pretty much the value of the capital, my capital in that account. That's how small it is, and that is the market value. If I were to sell those stocks right now, that is how much I will sell them to. Therefore, I will have that loss. So currently it's called unrealized loss. It's there because I have not sold it. So those numbers in red are unrealized losses, and the ones that are black are positive. So the one that I purchased one share of, the majority are positive, to the exception of this one. Yeah, to the exception of that one. So, and that is just an example of a small account that I'm swing trading in. If you can put $2,000 in an account, that's great. You can swing trade with that. Otherwise, start small. As you are putting money in it, you have your stock watch list. If you find a stock that you have enough to buy one share, you buy one share. Again, you can see how much the price per shares is for each one of them. So from this small account, I can show you another account, and this one is going to be account position for our taxable brokerage account that we swing trade in. And in the past, I didn't really do much with this account. We have few stocks and we just let it be, and we work more in our individual brokerage account and Roth IRA, trading with small dollar amount. But then in 2022 or so is when, or 2023 is when I decided, I told my husband that we are going to do more in our joint brokerage account, and then we start putting more money there and investing more there and using other strategy to invest and trade until 2024 I start swing trading. Again, the numbers in red are negative and the one in black are positive, but those are the stocks in the portfolio, and you can see that it has more stocks in here, therefore the capital here will be higher as well. And if we look at the cost basis, that is how much it costs to buy those stocks, and if we go to the bottom, you will see the amount there, and if we were to sell it now, that is what we'll sell it for. Therefore we'll have about $20,000 negative there, and we don't like to sell stock at a loss, so we just let them be until they become positive for us to sell it. And some stocks we purchased them in 2023 using a different strategy, and we purchase them for dividend income purposes, and as they become positive we sell them to free cash and use it to swing trade. And that's how we got into swing trade in 2024, by selling those dividend stocks that we purchased in 2023. As they became positive, we sell them to free cash to swing trade with. But you can see this is a bigger account, and that's that. So even with, you can see that the available cash there is very small right now, because with the strategy we are using, we are keeping the stocks in the portfolio longer. You can see some stocks that are well positioned positive, but we are not selling them here because I feel like we can accumulate more profit there. So therefore I'm not selling them just yet. And with that strategy, you do not have you'll have more of your money in the stock markets. So with that in mind, we can see that stocks that are purchased this month, I only purchased one share of them to stretch the amount that we save and send from our paycheck and send to our brokerage account. To stretch it, I just purchased one share. I could use it to purchase one stock shares, purchase multiple share of one stock. That's one way, but I just prefer to stretch it by just purchasing one stock of some share that were well positioned to purchase, and I purchased them there. Those happen on the 5th of December, so we can go back to, and then we have some stocks there that are paying us dividend as well, but we can go back and see if any of those stocks are positive right now. I think we have those two that we purchased. I don't know if it was this month. I'm seeing one here. But you can see that they are negative now. It went even lower, and I'm okay with it. I think I saw ADP as well. ADP is a little bit negative there, I'm okay with it. I think I saw ON as well. ON is a little bit negative there, and I'm okay with it. I'm giving myself that those stocks could be negative for 3 months or so before I start seeing them positive. That is a possibility. So we have CSS and CNI. So we can go in the C. CNI is negative there. CSS is positive, but you get the idea. So that's that, and I'm okay with it as well, because I know that those stocks, they are not going anywhere anytime. Therefore, I'm okay with it. But again, there are some possibility that some stocks might bankrupt on you, and you might lose that money. And we saw it in my Roth IRA, a stocks that is there that went bankrupt. So yes, and we have few like that over the years as well of our trading, and I just keep learning from it and keep tweaking my strategy to pick stocks that are quality stocks that are not will be there for a while, to invest in or to trade, because I know that I'm not going to sell them at a loss. If I purchase them at a higher price, I'll let just them be until they become positive for me to sell it. And a lot of stocks that are sold this year were purchased last year. And moving 2026, I'm anticipating more and more of my stocks will be like that as well. A lot of them that I purchased this year could be next year that I will sell them, or even further forward. Well, those are just example, and you don't need to start swing trading with this amount of money from the start. It took us years to be able to save this amount of money in our brokerage account and to start and to swing trade with. So just start small, and little by little your account will grow. And again, we have some profit through those trading over the years as well. Therefore, it's not everything there that is 100% from our paycheck, and a portion of that was even a retest as well from my husband side as well, when he got an inheritance from his grandmother passing. He suggested that we use the money to pay a good chunk of our mortgage off or things like that, and I said no, we are going to invest it, and we put it in the account. And then I did my homework, see how people trade for a living, because we were trading back then as well, but I wanted to we were trading with $100 of our own allowances here and there, but with a good chunk of money. I wanted to make sure we do not lose it. So therefore, we put it there. And in 2000, toward the end of 2023, I spent hours and hours going through different videos of people trading, day trading, swing trading, position trading, and all those. And until a strategy that one was using sounds closer to the strategy I was using, and it seems like it's something that I was more interested in, and I watch a lot of videos of that. I just keep narrowing my search down and keep learning. And from that point, in 2024, I start swing trading and did it and traded a lot in 2024. But then in 2025, I say, okay, there were 52 weeks low and 52 weeks high. Trading strategy that we use is great, but I can fine tune it with what I learned from swing trading, and I'll learn option and swing trading strategy was born. And moving forward is what I'm going to continue using as well in 2026. And you can see, let's go here, that with the strategy that we used to use, what we are able to generate from that brokerage account profit wise, and we focus on dividend income stocks back then. And in 2024 I focus on quality, better quality stocks, whether they pay dividend or not, with this short option and swing trading strategy, and trade it quite a bit every week, buy and sell every few days. And the money was more in cash than it was in the stocks. But then in 2025, using long option and swing trading strategy, the money is more in the stocks than it is in cash. So, but you can see it's now all the money that was capital, original capital, but we have some profit over the years that got reinvested as well. We do not use margin, even though the account was qualified for it. I think the rate is like 12%. What 12% it is, I'm not entirely sure. Per trade, per year, per month, I'm not entirely sure. We just prefer to save money, put it in the account, and swing trade from there. So, and deposit in the account. This year we even took some money out of there as well, but you just start small. So over the years we are able, it's just telling those transactions going into the account. So it took years to be able to accumulate that much in the account. There is just an example of it, how we are able to build that much. So just start small, and before you know it, your account will just start accumulating. Remember, you are investing, you are trading. There is a compound effect there. There is exponential growth there as well. So just start small and just continue adding your money there and continue growing your account. So we put every month, we are able to put money in there, and of course with the inheritance that got added as well help. But if we were not investor to begin with, we could have spend that money doing other things that we wanted to do. But I said no, let's put that money there and invest it. And I did my homework, because it was a lot of money and I didn't want to lose it. And I just felt like the strategy we are using, trading $100, could be improved. Let's see how people that are trading for a living are trading. And I learned that, and I said, okay, I'm going to start swing trading. And that's how we did it in 2024. And that's when we start swing trading. But those are just things to inspire you, to give you ideas on how slowly you will be able to build your account and grow it from there. And again, if you are now, if we were not I don't know how to say it, but even if we got inheritance and we were not building that account, we could have scoundreled it, like spending it on different things, travel, remodel the house, or pay mortgage, or things like that. And before you know it, you won't even know different things you did with that money. But it was the money I didn't want to touch. And as soon as we got it, I just say, let's put it there, let's put it there. So I had to go through my note to even see how much it is, because I did take note of those. But yeah, so that is just an example of those. So now let's go to our today's analysis and do two more analysis. So Google is not a buy for us today. Although we purchased it and sold it this year, if you want, we can check how much we made from that one. So GWW, because this is 2025, we purchased it there and we sold it there. We have arrows there. So let's check GWW. So GWW, we purchased it. So yesterday the price went up. The price at the end of the day was higher than the price in the morning when the markets opened. The price went up. But when we look at it, it's close to where we want to buy. It went below it and start going up from there. So again, it's close to where we want to buy. It's having some higher lows. If you want to buy some share, you can grab one now. But there is another value line at the bottom that there is a possibility it might come down to. But it has not come down there for some years now. But it is in the back of our head that it could come down there. So far we have two arrows there we have not sold yet, and let's zoom a little bit to see. So we purchased it there around this support line. When we saw that higher lows, it was down, it pulled back down closer to this one. We purchased it there, it pulled back again and went below, and and now start going up from there. So we got stuck in it twice, but we are okay with it. So right now we could be well positive in this purchase, because when I put my arrow there, my mouse there is a little bit below where the price is right now, but I'm still negative in this one. So even though I purchased this higher up, the price is closer to where the value line is right now because it's tilted upward. But we traded last year multiple times as well, and then this year we purchased it twice and got stuck in it for the time being. And I know it's not going anywhere, so we are just going to get stuck in it, learn from it, so that we know that next time we are not buying it at this value, at this support line, because it's supporting the upside wall of the mountain, is claiming it's not the value line, and we therefore we will be, if it comes down here, then we know that this is not the value line, it's a temporary one. This will be, if it does not come down here, then we know that, well, this is the value line for the time being. But again, we learn. That's why I like to put those arrows where I'm purchasing it, so that I can place my entry on the map and reference a little to see if it was a good entry or not, what I can learn from it. Arrows facing up are where I purchased, arrows facing down are where I sold. So the next one we are going to analyze is ICE. So today, this one you can purchase some if you want as well. At this point, the going into 2026, the strategy I'm using is, if is around the value line I like to buy at, I'm just going to buy, whether it's a red bar, a green bar, or not. So, and by the way, when it's a green bar, the price went up. When it's a red bar, the price dropped. And I'm thinking that I will buy more during the red bar day, because after all, if I'm buying, I wanted to pay less price for it. And when I'm selling, I will sell it on green bar days, because I will want to sell it at a higher price. So, but buying it at the value line and selling it after the peak. So ICE, yesterday the price went up. We have the high there. It seems to be going down. It pulled down and start going up. It's nowhere near where we want to buy, so we are going to continue observing it. I don't know if it's going to come down there yet or not, or if it just pull back and will start going up higher from here. I'm not entirely sure. It has been on this journey for 2 years now. We have 2024 here, 2025, and 2023 here. So 2 years now or so. So we are just going to continue observing it. It is not a buy today. It's far from where we want to buy. So we can go to our record spreadsheets, and we are going to look for Google. We purchased it in March for 164, and we sold it in August for 207. We pay a penny for fee, and we made $42 profit per share, or $2,000 for the total for all the shares that we purchased. But we got out a little bit early. So another one was GWW. We purchased it twice, in January and in March. You can see the price over 1,000 per share for the first one and 988 for the second, and we have not sold any yet. So, and we just like to let them be until they become positive. And we can see here where GWW is. Yeah, we are negative in it for the time being, and that will combine both shares for us. So thank you so much for your time. Just start small, and grow your account from there. We thank you very much for watching our videos. Thank you for your time. Thank you for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi Liberman, Girls of Liberman Consulting L.L.C YouTube channel, and ninasoap.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. We just like to make profit on each one of our swing trades. So therefore, we like to hold on to it and let it be in the portfolio until it becomes positive, accumulate profits that we are comfortable with, and we sell it to lock those profits in. For more of our swing trading strategy, please check the playlist in the description of this video. And we have a small group online workshop that we organize. The next one is Saturday, December 13, 2025, where you can practice analyzing stocks to see if any is well positioned for you to buy some share during the week. So if you are interested, please check it out at liberdownload.com and reserve a spot for yourself. Thank you for your time. And the link to the workshop is in the description of this video as well. Thank you.